Well, it's time for our December market update. Obviously, a lot going on with the recent election behind us. We're going to get Bill's take on that, what the market's reaction to the new administration means, and what does it all mean for mortgage rates moving forward. We'll discuss all that coming up. Hello and welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton at Cross Country Mortgage. Bill, we have reached December, and I know we talked right before the election last time and kind of discussed what could happen if either candidate had gotten elected. Now we know the results, and the market's reacted. So I'm kind of curious to get your reaction to everything so far.
Yeah, so the market is trying to interpret what a Trump presidency means and what his cabinet choices will mean. And right now it's a lot of what the expectations could be. So the market is kind of reacting to different choices that he's making. Treasury Secretary yesterday moved the market a little bit because the proposed Treasury Secretary could be bond friendly. So we had a good day in the market yesterday due to that. But overall, with some of the talk of tariffs today and the idea that the Trump presidency could be inflationary in some ways, today has been, as those headlines were released, the rates got a little bit worse today. So I think the market is trying to find footing and trying to understand policy. But, at some point, the market begins then to react to the reality of the situation because, even if Trump's economic policies are inflationary, for that to actually hit the market takes some time, right? So first he's got to take office, then he's got to, put certain laws and certain changes in place that would then affect the market. So this could be years out. So I feel like we're getting some jitters overall. Inflation has ticked down to its lowest level in over 4 years. It's very close to what the Federal Reserve wants as its 2% mandate. So we're headed in the right direction. With inflation closer to 2%, at some point, bonds are going to be able to relax and those rates are going to be able to come down. So, the short term is jitters, but the mid to long term, with the Fed's main goals of being to curb inflation, we still see rates coming down over the next, 6 to 12 months.
So it doesn't really change the forecast kind of across the board. I'm sure there are some opinions that change maybe by this election, but do you think that there is just kind of the same kind of expectation for rates moving forward, or do you think the jitters have maybe shifted some of that?
Yeah, so it's a great question because, again, and we look at economic forecasting from various different resources. We pay and subscribe to three different economists who, they're usually right a little bit more than 50% of the time, which gives us a little bit of an edge, but it does tell you how hard it is to predict markets. This is what these people do all day. They have teams of people that are looking at economics to try and see, how does this economic indicator affect? How does this policy affect? Where are rates going? So the short term has been jitters with no significant changes since Trump has been elected president. But look, the Federal Reserve and their mandate of 2% inflation really bodes well for interest rates. So if inflation remains low and the Fed does everything they can to keep inflation low, we do think rates will come down. We don't see a rate with a 3 in front of it anytime soon. Rates with a 5 in front of it would be great for anybody trying to refinance who bought over the last few years. It'll also help people who are stuck in a house that doesn't meet their needs at a 3% rate. At 5.5%, they might decide to move. But at 7%, they're going to hold tight onto that lower rate and probably not make the move. So even if we're in the 5s, we think that brings significant good news to people buying houses and people selling houses. We don't need the 3 in front of it, but we think 5% is probably possible next year. We were almost there in September of this year, of 2024. So we think we can get there in 2025. maybe into the 4s in 2026. That would be tremendous. So yeah, I think that's the forecast. That's the general consensus amongst the economists that we listen to and that we subscribe to.
All right. Well, if you have questions, you want to kind of get an update on lending options for yourself, maybe you kind of get a better idea of what your best options are and maybe what rates are available whenever you're looking for your next home. Again, get in touch, 484-352-4151, or again, log on, smartmortgageshow.com. Bill, as we close out the year, anything else in your office industry that is kind of top of mind into year, or are you just kind of trying to wrap things up and look ahead to the new year?
Yeah, well, so top of mind for us is if you're thinking about buying a house in 2025, what can you do to prepare? And if you do the math and you lay out the numbers based on current rates, which are upper 6s right now, and you also look at the returns that we're getting on real estate and the appreciation and the amortization of paying it down, we think when you look at the numbers, and especially when compared to renting, it's still a really good time to dig deep into the numbers. That's what we do with you, is we look at the numbers. A headline interest rate, yeah, it does knock some people out of the market, but by and large, it still makes sense to buy versus your other choices.
Does the market slow down at all around the holidays? Surprisingly, we actually closed on our home on December 27th. So I know that it is active, but I'm just curious in general around your area there in Chadsford, Pennsylvania. Does it get quiet? Do you get a little bit of a break around the holidays?
Yeah, we do actually. So it does tend to be seasonal, and especially up here in the north, in the colder weather, it's certainly slower. And our busiest time is spring, summer, and into fall. So there's some seasonality to it. There's people that are very focused on the holidays. So I think those two things, yeah, we slow down a bit and pick right back up kind of after the Super Bowl is kind of like that milestone marker in the calendar year that things start to pick up again for the spring market.
All right, we'll get a jump on it. Log on smartmortgageshow.com or feel free to give Cross Country Mortgage a call at 484-352-4151. Again, Bill is a regional president there in Chadsford, Pennsylvania. You'll be able to connect with him there. But no matter where you're located, feel free to get in touch. We always appreciate your support. Thanks for watching this update. We'll have another market update coming beginning of January, beginning of the new year. So, Bill, look forward to catching up with you again then.
Yeah, Happy New Year, everybody. Have a great holiday, and see you in 2025.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.